All right. Here we are on Apple Computer. We got the 1060 and our entry is 8.60 on a very low volume because Apple here in the video has slid the bid. And if I don't continue to go higher, I'm simply going to do this. Sell at 65 cents. Why? I'll show you why. Uh-oh, I didn't there. I'm executed for out at that price. I'm going to go below the marketplace here until I can see this thing firm up, and I'm going to put bids out here at 780 on 5. So I've got below the marketplace. The thing about it is, on an intraday option trade as a market maker, what people do not know how to do is adjust that exit. See, that's the whole thing that people can get ruined on. Because when this trend right here, you can see the prices. I'm down below the market. I've got a lower market price entry. But let me tell you why I'm doing that. Right here, this half bar at 320.31, I'm below it. See the ask 25? Here, let's get all of this in the video so that everyone can see it. I apologize. Merry Christmas to everyone. And MMTs, it's a blessed Christmas for you because for lots of reasons. When you're able to buy those put options on the way down, when there are reversals such as this right here, what did I say on the opening bell? Slide that bid. Then we made the bottom here. Slide that bid in pre-market. We even looked at Apple in pre-market. Everything was a short again. So the same trade that was on the prior 10 days remained the same way in day one of 10 more new days and going into the holiday. And we are currently sliding that bid. Now, you know that I own the 5 contracts at 860, and the high was 10.60 on that 320 call. I was a market maker on my entry, and Jim can tell you all about how it works. And then I came out, and I'm below the market at the next market. Just in case we break half of this bar, I'm below this market, as everyone's seen me put out there. I'm at $7.80. Say $7.80. Say $7.80. Say $7.80, because that's where it is. Now, let's take a look at our Google call. Remember I had orders out here on a $600 call? Did they hit me? No. I dropped my bid. 1380, 1370 was my bid. I'm walking down to this market now. 1320, I'm going to buy 5. I canceled out that bid. Remember, Jim and our other new person here, you're seeing master prices made and calls. I came out of these. I can always go back in, but I'm going to get below the market here at $13.30. If I'm made, I'm a wholesale buyer all the time because I got a market maker system both in equities and options, naturally so. So I'm undercutting it down there. I cut a little bit of the pastrami off, and I'm at 13.3. I'm already coming down to my 13.7. So I'm monitoring all of these call options. So once again, folks, all of this is done live before the move even happens. This is not after the fact. And it's something that you can tell your friends that you found a safe place and someone who does know what they're doing. Now, we're squaring off that market risk is what we're doing right now on these actual wholesale entries. And those wholesale entries are market maker entries. And that's what this school truly is about. So when you're shorting Apple and you're shorting the bull and you're doing everything and the fear indicators are breaking one way and we keep continuing to slide that bid, we got wholesale markets that's going to get made on that $600 call that we had out at 1370. Jim, you were there, weren't you? So now we've taken it down to the 1320. I got a 1330 handle. I got a 1330 handle. And I got a breakdown. I'm hearing that there's a breakdown. I'm below the market on that 320 call, and we'll update this one both on, once again, $600 call Apple, $320 call Apple, $600 call Google. Merry Christmas, everyone. It's a light schedule week for us, And it's a time where we take advantage of wholesale prices. When the market's willing to give them, we're going to be darn sure willing to take them. So basically, here we are, 1370. I'm going to go ahead. There's another market at 12. I'm going to go with the 1290 hook because at any time I can move in. I know there's another market at 1290, and I'm going to go ahead. I hit cancel all. So we're going to go ahead and we're going to bid that 600 at 1290. We're going to be buying those. We are pulling that market in. I know exactly where these markets are. So I know exactly where my wholesale bids are. And both names, Apple and Google, MMTs. We'll go back to the 3-minute movement on the equity so you can see how the pricing controls work at the bottom of the wholesale entry. Okay? So this is the kind of thing that we take advantage of during the Christmas holiday, is getting these wholesale bids. We're taking all the risk out of the market. When I'm entering 20 contracts, 1060 is a high. Hey, I'm buying over $3 lower than the public. So I'm wholesale. On 20 contracts, I just took out $6,000 of capital risk on the entry. I mean, let's call it for what the truth of it is. And being a wholesale maker here is also being a wholesale maker in the equity. Long and short the equity. So if this call is losing value, then that means that the other side of it is that put option that's getting the premium print. Okay? And so basically, we will come back to it. Right here, the low to the penny, Mr. Jim. 13.70 right now. Time 7:51 a.m. Pacific time. To the penny on that 1370 bid. I can always move in whenever I feel hunky-dory about the stock breaking almost $2 off the low. Apple's going to be breaking off of those lows as well. So we're going to have some good intraday breakouts right now. And that's the Google and the Apple. And there it is there. Live in action. Wholesale market maker prices versus public interaction with the Wall Street tape. Stay tuned. Learn how to get on the winning side of everything that you do when you finally surrender and become an SMF MMT.